Hi, everyone, and welcome to a special installment of Barron's Live with Investors Business Daily. I'm Coram, multimedia content editor, and today my co-host is Scott St. Clair, manager of IBD's Premium Products Group. Great to see you, Scott.
Thank you, Allie. How are you?
I'm doing good. How about you? We made it to
Good.
Friday.
Yeah, and next week is my favorite week. The market's half day, it's closed one day. What a great week.
There you go. Yeah, we have that to look forward to, but we also have the next 30 plus minutes to look forward to because it's, I think, one of our favorite topics as a staff to talk about, and that is Tesla, because there are so many facets to this conversation with the stock, the company, the CEO. I feel like it's harder to find a more contentious bull bear debate than that of Tesla, because the luxury electric car maker and CEO Elon Musk, of course, are constantly in the headlines. It seems like there's nonstop heated disputes among super fans and non-believers over the company's trajectory, over the stock's trajectory. And Tesla has been on such a meteoric rise, but it's also now about 56% off of its 52-week highs, and even further below its all-time highs reached just over a year ago in early November 2021, Scott. So I feel like now we're at a critical juncture here where the audience is wondering, should I still be in Tesla if I've been in it? What were those warning signs to get out? What are going to be the signals to get back in? And I know, Scott, you've been playing the short side of Tesla all year long, and the audience is interested in getting your perspective on how you played Tesla on the short side. So we've got a lot to unpack in the next 30 minutes, Scott.
For sure. Yeah, it's I've been doing this trading 25 years or so, and I know it might be a little bit of recency bias, but I can't recall a stock with so many people on either side and the extremes on either side. It's the greatest company in the world versus it's a zero. It's hard to believe that, that there's the chasm between one company can be so large. It's a great stock, a great story to study.
Exactly. And I feel like I'm kind of in a unique position here because I'm legitimately, I'm not just saying this as a journalist. I am not on one of those extremes. I am neutral. I've never made a lot of money in the stock. I've never lost a lot of money in the stock. I've played the stock here and there. I'm Elon neutral. I can honestly say that. So I really can see both sides of the debate here. But what's interesting, Scott, I feel like about what we do is we're looking at so many signals when we're making decisions about buying and selling. It's not just what the story is of a company. It's not just what the chart is doing. It's really a look at both. So talk to us a little bit about how that can be helpful with navigating this stock and this company here when you do have such a compelling growth story, and again, that meteoric rise behind it. I mean, 1,000+% move that we saw off of the COVID lows. So no wonder there are so many people that are so enamored with this stock, because there's a lot of people out there that have made a lot of money in it.
Yeah, I guess if you were up 10, 12, 15 fold in it, you would love it too. So I get it. Yeah, it's been a great company, a great story, and it's been an amazing stock. So it attracts a lot of attention for that reason. It's attracted a lot of attention on the other side as well, the non-believers, like you'd say. So, for us, I put a lot of weight in the price action of the stock, right or wrong. Sometimes that helps me, sometimes that hurts me for sure. But I put a lot of weight in the price. It's the stock market's this massive voting machine, and some of the smartest people and some of the people with the most money in the world, they vote. And the way they vote is with buying and selling, and so if you can learn to follow the footsteps of those people a little bit, then you can kind of stay in sync, is probably the best way to put it. It's really, you really want to try to stay in sync with the stock market as best you can. Now, that doesn't mean day by day. If you're a really long-term holder, maybe it means just checking a monthly chart on Tesla, which we might pull up later,
Yes.
and just using some type of monthly indicator to keep you in sync with it. I think you should have some type of plan when you invest in individual stocks. It's a must.
Mm-hmm. So sort of a roadmap for our discussion today. I think we should start with that COVID move and take a look at where investors may have gotten into the stock, how they could have played that super jet fueled run that the stock had, what some of those signals were to get out. A look at how you've played it this year, Scott, once again on the short side, and where we are now, looking at some historical precedents or analogs, as you call them, to be our guide as to some of the scenarios, potential scenarios that could unfold from here, because at the end of the day, I feel like that is something that helps give us an edge. Is we're not trying to predict where it's going to go, but if we can model out some different scenarios, that can help us be ready to act when we do get one of those scenarios that presents itself.
Sure, for sure.
Okay, let's do it. So for those watching the video version, I am now sharing my screen. We're taking a look at the weekly chart of Tesla. So for those listening to the podcast version of this later, we will be describing in beautiful detail what we are seeing here on the Tesla chart. So we will rewind the clocks to COVID, taking a look at 2020 and the move here by the stock. I'm actually going to go back a week just so I can, show more data here on this chart. So, Scott, even before COVID, Tesla had a huge run that you could have played. It also was on our radar there as well. In late October of 2019, a move of 27% in a week in some massive volume. And from there, it ran up from a split adjusted 22 to as high as 65 in a few short months. Then, of course, you had COVID. But when you see a stock that has a prior strong move like that, when it does start to rebound, that's going to be one of the names at the top of our radar.
Yeah, so a prior uptrend is key. I want to buy stocks that have shown they can make powerful moves previously. Think about how many times Microsoft or Apple has doubled, or Walmart, and you might think, well, it's doubled. How can it go any higher? And then it doubles again. And you think, well, it's doubled twice. How can it go any higher? And then it doubles again. And so, and those are, rare, of course,
Right.
But something that's making that kind of powerful move. Look at every week is blue, and it's in new high ground. That's the key. 52-week highs are the key. It's strange. The stock market doesn't work like the normal world. If they discount avocados, that you run to the grocery store to buy them if they're 50 cents on the dollar. That's not how the stock market works. You want to buy stocks that are in demand. Big money is telling you that they're willing to pay the highest price ever for that stock. And each time it makes a new high, it's giving you that story that somebody is in there willing to pay another highest price ever. And almost always, those are huge, big institutions. Bally Gifford, Ron Barron's funds, has a huge position in Tesla. And I don't know if he was buying there, but somebody was. Right? I don't need to know who it was, but I can tell somebody is in there buying that. And then you had the COVID break. And the reality is Tesla probably would not have corrected. Well, I can say it's probably fairly certain it would not have corrected that much if not for that bad break in the market. But once that kind of fear of the COVID break was over and the market came back, then these are volleyballs underwater. How long did it take Tesla to make a new all-time high? Maybe 7 weeks, 8 weeks. So even if you got shaken out of it, again, 52-week highs, those are your best signals. So you always want to buy them as they're going up, and it's very difficult for people. I think that's what cutting losses probably right there with it, but buying stocks that are too high is probably the hardest thing that the newer or average or and newer to stock investing person struggles with.
Yeah, and I think for me, a good way that has helped me think about it is that it's an odds game. If you buy something on the way down, like Tesla this year, the trend has been down. But if you buy something that the trend is up, you have the odds in your favor that it's going to continue going up. Of course, it's not guaranteed, but if you think about it in terms of probabilities or odds, I feel like that is something that is really helpful for me.
I agree. My favorite way to phrase this, and I wish I could give credit where credit is due. I stole it, but I would rather buy a stock on the way up, hoping it keeps going up, than buy it on the way down, hoping it stops going down. See, do you understand the difference, the significance? The stock is in motion. It's, if it's gonna go to 1,000, it's got to go 300, 301, 302, 303, 304, and every price that it goes higher is signaling to you that you're on the right track. And this year, it's been the complete opposite. It's literally almost, especially in this last wave down, like it's like almost every day it goes down another dollar in general, right? And then you hear the reverse. Now Tesla is a value stock, is what I hear, which is code for a stock I'm underwater on, because it's underpriced, et cetera. So you really want to, and this applies to Tesla and all other stocks. You really want to buy them on the way up. And hoping is not hope's not a stock market strategy, but that's the word I'm going to use in this case. Hoping that it continues to go up. My experience is, like you said, based on the odds, it's not perfect, but my experience is that's what happens more often than not. They keep going up. How many times have we seen a stock we wished we'd bought at 50? It's 52. You can't bring yourself to buy it because you saw it at 50. It's 55, and you're like kicking yourself. And then it's 60, and so on and so forth. That happens to all of us.
Yeah. It's a tough game, but if you can learn to analyze chart patterns, put that in combination with overall market conditions and that fundamental story, all of these different layers and factors, that's just going to further put the odds in your favor, and to have rules if you're wrong, right? Because no one's batting 1,000 out there.
Nobody is. Even the best in the business are probably 40, 50% at best.
Yeah. So that's a good reminder there. So this chart did show a cup with handle like pattern. If we went to a weekly or even a daily chart here, coming out of COVID, hitting new highs, like you said, in a pretty quick way here, into new all-time high ground. I don't know why I'm tripping up over that. By June of 2020, and this moving average line here, we are on a weekly chart. So we have the red line, that's the 10-week line, held the stock for the vast majority of this move. So that could have been what has kept you in this through those wiggles and wobbles with some buying opportunities along the way, whether those are pullbacks to that moving averages or even breakouts to even more new highs here, Scott. But in real time, the IBD team was talking about in January 2021, some climactic action for the stock. So you could have been selling into that strength. And then from there, the stock did take a long time off.
Talk to us about that. And so I pick something, right? If you own the Tesla or XYZ, use some type of signal to get you out. And it's not going to be perfect. Like if you used a close below the 10-week line, that red line, it would have got you out, around, 240-ish or something. And for a week or two or three, you're happy that you sold it because it broke 200. Then it rallied back, then it broke 200 again, but then it made another high all the way to 400, and then it's like, I know now I know why I didn't. You don't want to sell, but you have to have some type of rule, whether it's a moving average or a percentage off high or something. You want to do something, I think, with individual stocks, because history, it shows that a lot of individual stocks come and go. I mean, the very few individual stocks have stood the test of time. And there was a study by an Arizona State professor where roughly about 4% of the stocks make up the vast majority of the index gains, and I think it was like 58% of the stocks underperform T-bills. So if you hold them through their entire cycle, you more than half the time you've been better off in T-bills. So I think, and you have to have some type of sell strategy. Now, there's people out there that they've bought Tesla and it's split adjusted 10, 12, 20.
Right.
And they have $1 million accounts, and they post their screenshots to Twitter, and they tell you all the reasons why you should never sell. It's a needle in a haystack. It's congrats. I'm envious of people that have done that. It's amazing. But
and if that is you, then maybe you do treat it a little differently at this juncture. But for for the rest of us,
well, I would still. I don't care if you're up tenfold or 50-fold in the stock. I think based, and this is per my training, listening to Bill O'Neill and reading his books, and even
some sort of line in the sand.
Something. You should have some type of plan, and maybe you take what I like to call a few bites of the apple. So if you have 1,000 shares of Tesla and you just can't stand to sell it, but the signals are telling you that it needs to be sold, maybe you sell 100 shares or you sell 200 shares, something to reduce that exposure, because the math is cruel. When it comes down 50%, and the fact is, if you've made a big gain in the stock, it's 50% on a large chunk of money. That's the hardest part, I think. So if you turn 10 grand into 100 grand, and then you're going to write 100 down to 50, psychologically, that's tough. You have to remember, you put $10,000 into the stock, and now you're going to let 50,000 just come back. And a lot of people say, well, the stock will come back, and maybe it will, but I'll tell you, based on history, is maybe it won't. And then what, right?
What would be a good example, Scott? A stock that's never come back from its all-time peak. That's like a big established name out there.
The biggest, most obvious one is Cisco.
Yeah.
Cisco is the poster child. If you when I was starting in the 90s, Cisco was the go-to stock. If the market was rallying and you wanted stock exposure, you just bought Cisco. And it's never seen that high, and probably never will if it hasn't done it by now. But in the meantime, look at the drawdown you had to endure. Anybody
80 to 8, basically.
Yeah, it's just, I don't know. I just don't think that's survivable, because the pressure will get to you. At some point, we're all human, and you will feel that pressure and get out. And so I've seen it before. In fact, I saw it with Cisco with a lot of people in the 90s that told me they'd never sell Cisco. I'll never sell it. At 90, at 80, at 70, at 60, at 50, at 40, at 30. I was a stockbroker at one time, and then at 30 they call me up and say, sell it, I can't take it anymore. So that is normally how that happens. So
do you feel like there's a similar psychological mindset out there right now with Tesla? Those who are saying, I'm never going to sell it. This company is still in an earlier stage of what it could do beyond just cars, with robots and with all of these other things, that the future is still so bright, and if people have a tough time with timing their buys and sells, just buckle up for the ride. What would you say to that?
Yeah, so it looks you sell it and you're not gonna get the high, so you have to get over that psychological trap. It's frustrating, but um, we talked about it previously, and if they better be right. If Tesla is just a car company, then it's probably going a lot lower, because compared to other car companies, it's not even close. From a market cap standpoint, it's tenfold BMW. It's ninefold Mercedes. It's threefold Toyota. And people will say, well, it deserves that. And so far they've been right. It has deserved a higher multiple, but I don't know if it's 10 times the company that BMW is. I don't have a Tesla. I've had a BMW before. I have every neighbor I have has a Tesla, and I just don't see it as 10 times the company of BMW. But I'm a little bit talking my book, like they like to say, because I am short the stock and have been. So that I think what you want to do, honestly, is if you're all bulled up on Tesla, you really want to try to say, okay, let's take the other side. Let's figure out why is the other side believe that it's so overvalued, and do some research. I do that. There's a hedge fund that's been long Tesla forever. They've done an amazing job, and they have a 90-page PDF on Tesla on their website that's free. And I read it. It's 90 pages, and I'm short the stock, and I read it. All the reasons why Tesla is going to the moon, and I want to hear their reasoning and be aware of what they see, so that I don't just stick my flag in the ground and say, nope, this has to go lower. I never do that with any stocks.
Right.
And I don't think anyone should, long or short, you should never do that. So it's gonna play out one way or the other. It's gonna be fun to read the history books on this one. Fast forward 24 36 months. You mentioned one of our colleagues who said maybe it just goes sideways for a long time, which is something that very few people probably even consider, like a Microsoft or a Cisco or an Intel after the big 2000 boom, where they literally just, as general. Now, Microsoft kind of got out of their funk, but that took what?
But yeah, dead money for a decade plus?
Longer, I would say,
years?
right? Yeah,
15, 16 years?
16 years of nothing. So, you have that time value of your money. If you could be right, maybe Tesla, let's say it's 177 now. Let's say it's 177 18 years from now. Is that worth it? Do you want to do that? I would say no. I would, there'll be plenty of other new leaders that you could move your money into in that time frame for sure. And if not, then you might as well just be in treasuries at 4% and compound that. 4% for 18 years. You'd probably want it 1.5 times your money, whereas it would go sideways. So these are all things you have to think about, and I would just say that the key word is just think about it, game plan it, and create these scenarios on how you want to handle it.
Right. So speaking of, Scott, and we've mentioned a couple times thus far that you have played the short side on Tesla this year. You are still currently short. And let's walk through, perhaps, I think first maybe some of the topping signals, and then where you took advantage of this stock on the short side and why.
So there will be a few topping signals, and that's the problem with how stocks top, is they don't just top in one day. Oh, here's the signal, it's time to go. my kind of thesis, which is so far played out, right or wrong, luck or whatever, but my thesis was we've been in a really nasty bear market, and Tesla was the leader of the previous bull market.
Mm-hmm.
Based on history, the leaders of previous bull markets correct on average 72% on average. That means some of them go down 90%, like Carvana or Shopify or whatever, or Twilio, and some go down 50%, like Apple or Tesla. I don't think Apple's gone down 50%, but Tesla, for example. So when Tesla was only down 10, 12, 15%, I was like, well, it's going to go down probably 50 to 70%, something like that, based on history. And so I was stalking it, looking for a place to short it. And it took me a few times to get a stranglehold on it. A couple of times it didn't quite work. And that's another thing, is you have to be resilient. You have a narrative that you think is going to play out, and you have to be willing to try and take a small loss, and try and take a small loss. And then maybe the third time you double your money or whatever. That's
exactly.
the same thing with the long side too.
I was about to just say, yeah, it's the same thing with the long side, not just buying and holding for dear life, no matter what. Same on the short side. Even if you have a thesis, you're going to get out if it's the timing, at the very least, is not right.
Correct. So I think when I really started to feel like I have something here, and it's going to be a good short, is in late September. There was a day where the market was up and Tesla was down, and it just felt like the stock had changed character. Any other time the market was up, Tesla was almost always up more than the market, And I don't remember the day exactly, but I remember I was short the stock, and coming in the morning, I thought, oh, I'm gonna be killed on the open. I'm gonna be down. Stock's gonna be up 5% or something, and it wasn't. It wasn't up hardly at all, and then it broke really bad, and a couple of other leading stocks at that time were down really hard too. So that was kind of the signal to me that maybe finally, this stock is waterlogged, for lack of a better term.
In addition to that divergence between what Tesla was doing and what the indexes were doing, talk to us also about the price trend and maybe some resistance levels that you were looking at in combination with that divergence signal.
Yeah, you can see how the stock had what was once the floor. We talked about the moving average on the way up, the red line, which is the 50-day or the 10-week. But also the 40-week, which is a much slower, longer term moving average. These were floors. These were support levels for the stock on the way up. And what was the floor on the way up becomes the ceiling on the way down. And so you can see how in early this year, March, April period, it tried to go above those moving averages and couldn't stay up there and broke. And then the next time it tried to go above them, it couldn't even get above them. So it's losing that power. And the relative strength line on that chart down below is showing you that, how it's making lower highs. Yes, exactly. And that's another good indicator, is that relative strength, because you want to be in stocks that are stronger than the market. Otherwise, just buy the market. You've got that diversification. The reason we buy individual stocks is for the upside.
Right.
When you get them right, they go more than the market. So you have that ceiling, the moving averages, you have the relative strength underperforming. And, Bill coined the term over-owned as far as, mutual funds and stuff.
Bill, as in IBD founder, Bill O'Neill.
Correct. Sorry. I always call him Bill. It's a sign of respect, not that we're on a single name basis. So you have potential sellers, and that time also, that's the Swiss National Bank has, like, at that time, I believe, like 5% of their balance sheet in Tesla. So I'm like, well, who's left? Who's left to buy Tesla? If you have not bought Tesla already, what are you waiting for? So there's no more kind of big money buyers. If the Swiss National Bank has a piece of it, I don't know. I guess aliens could come down and take a position, but you're out of buyers, big money buyers.
And I mean, this was around the holiday time, but this was a weak volume rally here. Do you pay any attention to that?
I don't. I have the problem with volume, and I guess this would be a whole nother Barron's Live. Is
that'll be the next month?
Yeah,
maybe.
I don't know. I've kind of gravitated away from the volume slightly because it's just so many algorithms and robots and computers that trade nowadays, and they trade against each other trying to make a penny. And so I don't know. I know the volume is important. I don't want to get totally away from it. I do look at it more on like a weekly and monthly basis, but I put, again, right or wrong, I just put a lot more weight in the price.
Right.
The price is the price.
Price is what pays.
That's right. I can tell my broker till I'm blue in the face that Tesla's worth 400, but when I go to sell it, he's going to say, you get 177 and change, Scott. Take it or leave it. So I put a lot of weight in the price action.
Exactly. Okay, so took a couple of stabs at trying to get in on the short side. Then in late September, that was a pretty good signal. And so talk to us about how this trade has unfolded. You held through earnings. Have you been trading around the position? Talk to us about some of the tools that you've utilized to keep you in the trade.
Yeah, the problem with the short side is the math is worse as far as the position sizing of your account, whereas the other way, when you're long something and it goes up, it becomes a bigger portion of your account. So when it's going in your way, it makes a bigger difference. Tesla, if it goes lower, it makes less and less incremental difference. So you have to short more if you want, and that's a tough game. Shorting is a tough game. I would say most people probably just want to learn to sell just to protect their gains or protect their capital from longs. So it's not as big a position as it once was from a sheer mass standpoint, but also because I take some off. I don't. It's not going to zero or anything like that. So I want to be tactical about it. And so, I started out with options because my broker wouldn't let me, one of my brokers anyways, I couldn't get a borrow. I couldn't short Tesla. So I started out with options, and then I finally have, a broker where I can short it. So I shorted the stock. And then in my IRAs, there's a lot of new ETFs are coming out, single stock ETFs, and Tesla has one to the downside, TSLQ. So, I've owned and do own that one.
And so here was that, but even earlier, the late September area, the September 21st and 22nd, that was in here. Maybe another entry in even later in September or early October, potentially.
Look at TSLQ on 9/22. You see that really big day that it's up 4%, and you have. I know Marcus Smith doesn't see this as a double bottom, but I love shakeouts. I love when they go down, take out a low, and then come back quickly. Now this is going the opposite Tesla, so it's a little strange, but I see this as like a long play, and so that would be if that was XYZ stock, that would be something that I would buy. So that helped me too, is this product, because I think it's easier to see and to identify patterns to the upside, because that's what we've been looking at forever. Short sale patterns in those. I've just never spent a lot of time trying to figure those out. So it's a little tougher, but these products, Nvidia has one, Amazon has one, Apple has one, and probably will have, plenty will come out later. but they help you to visualize the other side. So if you own NVIDIA or you own Apple or you own Amazon, I would be looking at the reverse ETF and ask yourself, does that look like a buy?
Right.
If it does, then the stock you're in is probably going lower if your analysis is correct.
That's such a good point, Scott. So I want to go back to the chart of Tesla here and start to incorporate some audience questions into our analysis of where we're at now with the stock. And go back to a weekly chart here. It's down 9% for the week. It's on pace to close below the lows of this base structure from 2021. So a lot of questions about, okay, what's your ultimate goal here on the short side, and when would you be getting out?
So I don't set any price targets up or down. I just let the stocks kind of do what they're going to do. And that way if I have this price target of 160 and it stops at 162, I'm going to be in trouble because I'm not going to cover it. So I just let it kind of do what it's doing. It's underperforming the market. And so as long as it's doing that, I'll just stay short. And I know this morning the market, this is a great signal. So this morning the market tried to open higher and Tesla was up like $2. It was 183 to 185 is what? It's 1%. So they haven't been able to put any pressure on me so far. And within 90 seconds, the stock was down on the day. So these are clues that you need to learn to view when you're looking at stocks. It's like, the market's higher and the stock can't even stay green for more than a couple of minutes. What's going on there, right? So I'll stay with it as long as that at some point. Now, if it gapped down, like let's say Monday, it opened at 165. I usually almost always will cover those gaps because you're almost always better off. I think if you look at the daily, there was a day on 1020 where it gapped down, and then it did go a tiny bit lower. But I remember thinking, this is a cover. I should cover this. I had a hard time doing that, but I did cover a lot of it, and it ran from 200 to 237. And so, when you're short, that's 18.5%. It looks like nothing. It looks like it just barely moved. It's 18.5%. So you'll feel that pain, believe me, if you short it.
Yeah, we don't want to be down 18.5% on a long position. So that's just eating into your profits on the short.
Yeah, I would have a hard time giving back 18.5% of a gain, right? Even if I was up 60% in it. So yeah, that's why the short side is so tough, is these little moves, they'll get you, they'll put a lot of pressure on you, to force you to take some off or take it all off. And that's the other reason why you don't want to short weakness. You don't want to short, like it's breaking the lows that you talked about. Like I would never short it like that. I might stay short. I might risk staying short here, but you don't want to turn the
short
chart
entry.
You don't want to turn the chart upside down and okay, it's breaking new lows, time to short. I think you'll find you'll get run in almost always. I would say 3/4 of the time.
Well, it's also extended from the moving averages. It's over 22% below the 10-week line. Just like, we don't want to be buying something when it's 22% above the 10-week line. So extended from that perspective. You want to short it. Sure, that's what makes shorting. Another thing that makes it hard is you have to short it on the way up. And it's moving up. Why do I want to short it? Stocks are higher, the market's good, and maybe we're gonna have a follow-through day. So you're not thinking about shorting at that point, and that's usually the best time to be putting it on. So we also talked about precedent analysis or looking at analogs, and I feel like that might help answer the next question potentially, or just help us get a better sense of your mindset, Scott, and the different scenarios that you're modeling. Because Patrick in our audience is asking, where would be the next place to short Tesla? I mean, maybe if we get a rally up into this declining 10-week line again and a rejection. But talk to us about a precedent that you're looking at and what signals it's giving you.
So if you pull up the monthly chart, and you're going to do Apple, right? Okay, good. So let's do Apple in 09. So, and remember, an Apple in 06, 07 was the leader, right? It was Tesla. It was the best stock. Now, a bigger, different type of company. So you have to, put that in the context. But this was the bull market leader of the 06, 07 bull market. And then the bull market ended, right? And so you see that break from Apple was 48%, and then it rallied, and then it crumbled. And the move for Apple was 26x, 26-fold move. Oh, I'm sorry, I'm looking at Tesla. It was a 27-fold move for Apple in 4.5 years, that move. Okay, so amazing move. And then it breaks 43%. Then it rallies, and then it breaks again. And this, if you fast forward just a couple of months, you'll see that it stopped going down, and then finally started rallying. So I just overlaid Tesla to Apple and thought, it's kind of the same scenario when I talked about, they get all the leaders. So Tesla, they're going to get Tesla is what I thought. And so I wanted to see if there was an analog to Apple's on the monthly. And Tesla went up 26-fold in 2.5 years. So much quicker than Apple, but I think I was enamored with the fact that the move was almost exact. If you go to the monthly,
wise.
Yeah, for Tesla, it was a 26-fold move.
Thinking here. I typed in the ticker wrong.
Yeah, I didn't like
pull up
the wrong ticker, did it?
Yeah, I didn't like that.
Yeah.
There we go. Tesla. It's like, you're going to keep talking smack? I'm not going to show you the chart.
Change it to, reset it to today. Maybe
that's why. That is why. It's the thank you.
It hates the date.
It hated the date. Yeah, reset it to today.
So there you see, in Tesla, 26-fold move up, and then it broke 48%.
In this first couple of weeks here before rallying.
Yeah, that's 48%. Hard to believe, but and then rallied.
Yeah.
And so that was where I was like, oh, this is the setup. This is the short. Now it's undercutting those lows, and that's what Apple did, and that's where Apple stopped. So if the bulls are right, and they could be, I have a dog in the fight, but I'm open to anything. I don't. I think Tesla's going a lot lower. I really do, but I also know that I could be wrong. So if Tesla's going to follow this analog like Apple, it needs to stop going down. It now doesn't mean it has to necessarily go up. You can see Apple went sideways for a number of months, but then the bull market started, and then Apple resumed its leadership. So you're looking at Tesla, if it follows this analog sideways for a couple of months, then you need a new bull market, which is possible. And it's, we've had a pretty good bear market. And then higher prices. If you want to buy Tesla,
wait for this.
I'll buy it at 250. I'll buy it at 300. I'll buy it. Yeah, that's the where you want to buy it. As crazy as it sounds, I know that people say, "Well, why buy it at 300 if you can buy it at 170?" Because I don't know.
We don't know if it's going to do this.
I don't know if 170 is on its way to 70.
Yeah.
Whereas, like we talked about, and you talked about the probabilities, 250, 300 has a higher probability of on its way to 350, 400, 500.
Yeah, great points there, Scott. Okay, so another audience member Whitney wants us to talk about overhead supply with regard to Tesla. How should we think about that?
It's a great question because there's a zillion of it. It's just bathing in overhead supply, Tesla is. And if you go to like a weekly chart, you've got, what's that? Maybe a year and a half, maybe longer if you go back to the previous base. But overhead supply usually runs out after probably a year and a half. If you own Tesla way inside there, you probably aren't selling anyways. But what overhead supply is, there's people that own the stock at 200, 212, 214 that want out. And the classic trap is, if I could just get even, right? There's something about human psychology. We all love to get even, right? So everyone who owns this stock, anyone who's bought the stock this year is down. Anyone, I mean, even today. So most of those people will be glad to get even, and that's what creates overhead supply. And so there's a lot of it, and a lot of institutional money that might have overhead supply. And the other thing about, as it goes lower, why you don't want to buy it at lower and lower prices, because you could get some forced selling. And that's the worst kind of seller, because they'll take any price. Right. So, if you're on margin with Tesla, at some point, there might be a guy or a gal out there that, where the broker says that, you got to come up with more money to hold this. And they say, well, I can't. And what does the broker do? They sell it. And they don't care about the price. They're in the protection business at that point. So they'll take any price. And buyers, the market kind of feels that, it knows that, and what the buyers do, they just step away. Why should I pay 175? I could get it at 165 in 2 or 3 days. And that's how you get those kind of whooshes, those waterfall declines that occur once in a while.
So a couple of different scenarios that we need to be aware of. Thank you so much, Scott. Before we go, just a quick thought on the bull case here for Tesla, which we kind of talked about. Where would we get in? Where's going to be that next opportunity? And this is something that we talked about a little bit on IBD Live this morning. Let's draw some trend lines from the highs. If it can get above this trend line here, that would definitely put it back on our radar. Then if we get some sideways action and higher prices, as you said, that would definitely strengthen the case there. But we could also see a rejection for the stock, even if it does rally. That's definitely a significant place where we could see the stock bump its head up against. So we have to be ready for that as well. And for those who want maybe an even steeper trend line, instead of going from the all-time highs, you could go from the spring highs and draw that. That would coincide right around with that 200-day line, or the 40-week line on this weekly chart, and the 260 price level. So we'll have to see what scenario unfolds with Tesla, Scott. But I think the point is to be aware of those different scenarios. And it goes back to the foundations, right? Use rules to get into stocks, use rules to get out of stocks, and be aware of what the potential could be on both the long and short side. So just some final thoughts from you as we wrap up today. I know there's so many more questions from the audience that I wanted to answer, but I guess that just goes to show you just how great of a conversation that this is, because there are still so many questions left unanswered that we all have, and so much more that we would love to discuss. But it was fun, Scott.
It like you mentioned before we started, this stock stirs up more debate than any other stock I've ever seen. It's not even close. So it probably will stir up more debate as it goes along. But I think the main thing is it really, if it's going to go a lot higher, and it could, maybe they knock it out of the park with the robots and the solar and the autonomous driving, anything's possible. You know what it'll do, Ali? It'll build a base, and that might be next year. And remember, all this chart that we see will slowly move over there, and you'll get all this new price action.
Yeah, new information.
And maybe in 23 or 24, it breaks out of a cup with handle or a double bottom, and we can do Barron's Live in 2024 on why we're buying Tesla.
We'll have to see. Well, thank you, Scott. Really appreciate your insights as always. And thank you so much for everyone for tuning in. Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.